I think that right now we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession. This is the nature of the cycle. It is coming also at the same time as we have a budget issue. Now, the budget issue is a comparably important issue.
The billionaire investor and the founder of Bridgewater Associates, Ray Dalio, has been expressing his concerns about the economy and the global macroeconomic situation. Dalio warns that the U.S. is at a critical decision-making point, where things could become a lot worse than a recession if the problems are not addressed in the right way. Ray Dalio draws strong parallels between today's economic and geopolitical environment and the 1930s, highlighting several similarities that raise concerns about potential global instability. These key parallels, according to him, are issues like rising nationalism, excessive national debt, increasing wealth gap between the rich and the poor, and internal as well as external political problems. Meanwhile, the global AI race is heating up. Dalio calls it an economic battle that no country can afford to lose. While U.S. tech companies are pushing the limits with advanced, high-performance AI models, China is playing a different game by using its industrial power to mass-produce low-cost AI chips. With U.S. export restrictions and trade wars intensifying with China, Chinese companies like Huawei, Bayern Technology, and others are pushing hard to develop good enough chips that can be made at scale and with lower cost. Ray Dalio has been warning for several years now about a potential escalation between the U.S. and China if things continue to go in this direction. He also highlights a breaking down of the monetary order due to unsustainable government spending and debt levels. He argues that the U.S. cannot continue spending at current rates, necessitating a restructuring of the monetary system.
I think that right now we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging the existing power, if you take those factors and look at the factors, those changes in the orders, the systems, are very, very disruptive. How that's handled could produce something that is much worse than a recession, or it could be handled well. Right now, we're at a juncture. Let's take the budget. If the budget deficit can be reduced to 3% of GDP, it will be about 7% if things are not changed. If it could be reduced to about 3% of GDP, and these trade deficits and so on are managed in the right way, this could all be managed very well. I believe that members of Congress should take the pledge, what I call the 3% pledge, that in one way or another, that they will get that budget deficit down to that number. If they don't, we're going to have a supply-demand problem for debt at the same time as we have these other problems. And the results of that will be worse than a normal recession.
Ray Dalio often draws parallels between today's world and the 1930s. He points out that we're seeing today a very similar mix of conditions. In the 1930s, the world was still recovering from a financial crisis. Nationalism was on the rise, international trade was breaking down, and major powers were competing for dominance. According to Dalio, we're now seeing a modern version of that play out, with economic policies becoming more protectionist, political divides deepening, and the global power balance shifting when it comes to the US and China. He says typically that there are 5 types of wars and that we currently have 4 of them. Here is what he said.
As I say, well, there are 5 types of wars. We're in 4 of them.
Right.
And we're at the edge of a 5th.
Which is a shooting war.
That's right. So we are in a trade war, we are in a technology war, we are in a geopolitical influence war, and we are in to some extent, a capital and economic war. We are there. And we are dealing with military issues, particularly as they pertain to Taiwan. So we're close.
Could Taiwan be the thing that led us to war?
If we go to a military war, it'll almost certainly be the Taiwan issue.
Ray Dalio warned that tariffs are a risky move, especially in an already shaky economic environment. Their long-term effects are hard to predict and even harder to manage. They might give the government a short-term revenue bump, but they also raise the risk of inflation, trigger retaliations from other countries, and cause huge disruptions in global supply chains. One of the big challenges with bringing manufacturing back to the US is that a lot of people are not willing to pursue a career in factories where they get paid $20 per hour. It's not that factory work isn't important. It's just that the US and even the European job market have shifted over the past few decades, and a lot of people would rather pursue a career in tech or finance than anything else. There's also the education gap, where many younger workers are trained for white-collar roles or digital skills, not hands-on industrial work like in many Asian countries. In fact, the founder of Apple, Steve Jobs, famously said back in 2011 that manufacturing jobs aren't coming back to the US, when he was asked about what would it take to make iPhones in the United States by Barack Obama. Manufacturing is not just about labor costs. It's about speed, scale, and the supply chain infrastructure that countries like China have spent decades building. In China, if a factory, for example, needs 5,000 workers overnight, they can make it happen. The US, by contrast, no longer has that level of manufacturing agility or depth in industrial support. Several companies have been ramping up manufacturing in other Asian countries instead of China, and instead of bringing it back to the US. Apple has been gradually moving some iPhone production to India and Vietnam, while other tech giants such as Dell and HP have announced plans to shift some laptop and PC production to countries like Thailand, Vietnam, and Mexico. Some experts suggest that if manufacturing were to be brought back to the US, an iPhone, for example, would cost $3,500, while PC prices are expected to go up at least 20%.
Well, mechanistically, it raises costs, it lowers revenues for companies. I mean, what does it mean for a company? It means costs are going to go up, revenue is going to go down, and capital is going to be harder to come by. And so, and then we're trying to replace manufacturing. I mean, I agree with the problems, okay, about the fact that we don't manufacture and that there is a problem with that. But there's a structural problem of whether we can manufacture. We have a population that basically 3 million people, 1% of the population, is incredibly brilliant. I mean, they go to the best schools, they come out, they make the unicorns, inventiveness, half of which, by the way, are foreigners. And at the same time, they are making the unicorns. At the same time, what we have is 10% of the population around them that's doing very well. The 60% of the population has below a 6th grade reading level. And it's tough to be productive. So when we agree with the problem, too much debt, Secretary Bennett and others agree we should get it down to 3%. We have to get the budget deficits down to 3% of GDP. This is not, we all agree on the problem. The question is, what do we do about it? How do you create that self-sufficiency? And so from a practical point of view, that manufacturing is very difficult under this sort of circumstances to create within the United States, yet it's needed. At the same time, I do agree that this interdependency, this issue of productivity in the world in which we have to be competitive and productive, and we're not competitive in producing things, is a longer-term problem, not an easy one. And I do expect that it is going to have political consequences.
So what do you think? Are we really headed towards something worse than a recession, or is the economy more resilient than it seems? Comment down below and let us know what you think. And with that being said, see you in the next one.